Let's welcome in Pratik Gupta, who's with us, CEO and co-head at Kotak Institutional Equities. Pratik, good to have you with us here. Good morning. Thanks for your time. So, with just the key takeaways from the conference, Pratik, you know, at the margin, while the correction perhaps was not caused by the fear of tariffs, I don't think that's the case. I don't know if you disagree. But now all this talk about tariff is a spanner in the works, right? I mean, look at this Pharma thing. Now you got to look at which company gets impacted more. I mean, it just complicates the picture, right? Even if stocks have fallen. And muddies the waters in that sense. Just your thoughts, Pratik.
Yes, hi. Good morning, Prashant. Just firstly, as far as the conference is concerned, we're still in the midst of it. Another 2 more days to go. But as expected compared to last year, while the turnout is still very, very strong, we have about 200 plus foreign investors, about 700, 800 domestic investors. But the mood is definitely a lot more downbeat, a lot more cautious, circumspect. Although nonetheless, given how stock prices have fallen in the last few weeks, there is a lot of interest in checking if this is the time to buy or there's more downside. In some cases, investors meeting their portfolio companies, just trying to figure out what the outlook is like. So the conference, the mood is definitely a lot more downbeat compared to last year or even a few months back when we were hosting a lot of other investors coming into India. As far as the Trump tariffs are concerned, yes, we agree with you, and that is one of the reasons why I guess globally we're seeing a bit of a slowdown. When there's uncertainty, typically businesses tend to pull back. They hold back on their investments, their expansion plans, and that actually is the bigger damage than perhaps the direct impact of the Trump tariffs. You know, there could always be some walking back, or there could be renegotiations, and one day there are tariffs, the other day they're postponed. So those kind of things keep happening and will likely keep happening. We will live in a more volatile world. So in that scenario, what we are seeing is globally, and including in India, we're seeing the private capex cycle sort of getting pushed back a bit, which in turn is obviously a bit negative for some of the capital goods companies in India. But that is definitely impacting the growth environment globally and even in India to some extent.
Any conversation, Pratik, around Tesla specifically? Anything you've picked up at all? How are investors? I mean, Indian auto companies are, they're in everyone's portfolios, right? A big one, Tata Motors, Mahindra. Any talk around this one?
Just some. I mean, I think it's early days. It'll take time for them to ramp up, and obviously they'll be catering more to the relatively, mid to higher end segment. So less of a concern. And also, a lot of the domestic auto companies, their stock prices have fallen a lot. So in fact, we're seeing, despite Tesla's entry, a lot of investors meeting these companies and looking to buy these stocks as the outlook is perhaps not as bad as feared, and Tesla's entry will take some time to have an impact. So not as concerned, to be honest.
By the way, on the market, there's intense volatility in the first 5-7 minutes of the open. The Nifty fell 120 points and it bounced back. The cut was hardly 25-30 points. Now again, it's sliding down about 1%. So it's really going all over the place. The good news is the midcap index has shown a very, very good recovery. From a 1% decline, look at the midcap index. It's actually positive now. So there's a lot of bottom fishing that's going on, bargain hunting. I just want to pull up some stocks. Look at Hitachi Energy. So what are people buying? Where are the bargain hunters going? Hitachi Energy, Reddington, Electra, Green Tech. A lot of PSU stocks are seeing a lot of buying today. Pull up a Garden Reach, shipbuilders, a lot of defense stocks, actually, even the private sector names like Data Patterns, etc., up and about. And on the volume charts, it's really PSUs all the way, RVNL, RailTel. These are the stocks. So PSU seeing buying, some defense stocks seeing buying, and overall a recovery in mid-caps. Let's see if this can sustain. Pratik, hi. Great to have you on the show, and thank you for joining in this morning. On the sectors that get impacted by tariffs, for instance, Pharma. I mean, the knee-jerk reaction this morning was sell Pharma because Trump is saying 25% tariff. But how would you navigate it? What is the house call on areas like Pharma? Because otherwise, there's relative safety. It's perceived to be relatively safe. But now with companies being big exporters, you have, another uncertainty out there.
Sure. So I think as far as pharma is concerned, there are hardly one or two companies which are almost 90, 100% dependent on the US, for example. Most Indian pharma companies will have a mix of a US business, European business, other global markets, and a very strong India business. So our view is always, or has been for the last several months, that focus more on companies which have a large domestic presence, because there the risk of tariffs is a lot less. Second, even where there are tariffs, companies which have a very strong product pipeline or strong brands or a sort of very strong market share in their respective generic products, we believe that they'll be able to pass on the impact of the tariffs. India still remains one of the lowest cost drug producer in the world, especially for generics. So to that extent, we're not as concerned. And thirdly, from a valuation perspective, especially in the context of the overall market as such, we find the pharmaceutical sector now looking relatively attractive. Most of the large cap pharma companies in particular are trading in their sort of mid-20s on a one-year forward PE, and earnings growth is in the mid-teens. These are generally companies with strong balance sheets, very good ROEs, very strong free cash flows. So we like the pharma sector now, especially given the correction that's happened over the last few years, despite the Trump tariff threat.
All right. Hi, Pratik. Let's look inward, because President Trump's tariffs is creating a lot of uncertainty on pharma, which you mentioned, like autos and the other sectors. Let's look inward. Let's talk about sectors I think we have briefly spoken about in the past, and you were hinting towards some kind of positive stance. Insurance companies, they haven't really done much. My colleague Yash had put out a piece yesterday. He was talking about valuations being far more palatable. What's your view on that space? Do you think that could be the pocket to hide in, where valuations are there, in your favor? There's that penetration argument that we keep making out here. Do you have a split verdict out there? Your view on the insurance stocks?
Nigel, yes, we've liked the insurance sector, and that rationale hasn't changed much. This is a sector which for the last few years has taken a lot of knocks. There were, we had the COVID-related claims, we had the taxation changes, we had the surrender value issues, and there were all kinds of, now you have the composite license threat. So the sector's been going through one issue or the other for the last few years. And as a result, the stocks haven't done much, and therefore the valuations now are looking very, very attractive compared to the broader set. And as you rightly said, yes, the penetration is still very, very low, a long, long way to go. So for investors who have a slightly longer term horizon, let's say 3 to 5 years, the life insurance stocks in particular are something we like. And I think along with that, I would say not just the insurance stocks, even some of the other financial stocks, especially the large private banks, or even some of the mid-cap private banks, the way they've come off in recent weeks. While the growth may not be great, but valuations have come off a lot. And we don't see the kind of worries which are out there on asset quality or NIMs or the growth is still decent. It'll be, low double digits, something in most cases. And we think the asset quality concerns at this point in time are a bit overdone. And more importantly, again, valuations are somewhat more attractive in the entire financial stack. Insurance is definitely one of them, but also I would highlight the private banks and some of the large NBFCs as well.
Private banks and some NBFCs as well. Just a quick word on, and we have a banker coming up a little later on the program, but again, any feedback on supply this year, equity supply this year, Pratik? Because, there was LG was lining up for a big one, and some estimates are the supply could be, and I think Atul Mehra of Axis was telling us $55 billion worth of supply this year lined up. But I mean, these numbers change and self-correct depending on what the market situation is, right? What have you picked up, Pratik?
Absolutely, Prashant. As you rightly said, these numbers self-correct. The sellers are not there at any price. If there is a $55 billion pipeline, and I would agree, yes, there's a long list of companies which either want to go public, or there are PEs or promoters who want to sell their, offload their stakes to some extent. But it's not price insensitive. So at current prices, we think the supply pipeline, especially on the block side from the PEs and promoters, that will get pushed back unless there is some end of fund, the private equity fund is reaching its end of life. Those are different situations. But otherwise, typically you tend to see the supply gets pushed back. And that always adjusts with the demand environment. When demand is very strong, when the markets are very bullish, you'll see a lot more supply coming in. When markets are down, sentiment is very negative, buyers are demanding a much bigger discount, then the supply sort of dries up or gets pushed out. And you'll tend to see IPOs which will happen. Kotak, as you know, is one of the biggest banks in the IPO space. We still have a long list of IPOs, but most of them are probably later in the year. So let's see how markets pan out. We think things will stabilize in the next few months, and that's when you'll see a lot of these IPOs and blocks and QIPs happening again. I would just say actually QIPs may be a bit less because there was a lot of opportunistic capital raising happening in the last 6 to 9 months. So it'll be more IPOs and blocks in our view in the coming financial year rather than QIPs.
Interesting. All right, we'll keep that perspective in mind, Pratik. But before we let you go, on the market per se as a whole, you just said that you were expecting things to maybe stabilize and start easing out over the next few months. But really, what is the call? I mean, for the rest of 2025? Range-bound market, more downside, and are you in the camp that's really hopeful of a quick earnings recovery? I mean, the hope is now on Q4 and Q1.
So as far as earnings are concerned, no. We think the outlook is unfortunately still quite bleak, at least in the short term for the next 1 or 2 quarters. In fact, on the consumer side, some of the companies we've been meeting, they're still guiding for a weakish quarter in the March quarter. And I think even the June quarter may not see a sharp recovery. So the earnings side, we're still somewhat conservative. We think we'll see modest earnings downgrades. At Kotak, for the Nifty, for example, we are projecting about a 15% earnings growth for the Nifty in FY26 and another 14-15% in FY27. We think there could be some modest downgrades to FY26 earnings estimates. As far as the market as a whole is concerned, I think the large cap space, we think there is value emerging over there. That's a segment we typically like. We don't see too much downside over there. But the small and mid caps, by and large, and there will be exceptions, but by and large is still trading at expensive multiples, the small cap index in particular. The other thing to keep in mind is the investor sentiment, and especially among the foreigners, where one, you've had the very strong US dollar, the Trump tariff uncertainty, earnings growth slowdown. And by the way, I should also mention the capital gains tax in India is also now beginning to bite. When foreigners when they were seeing a 20% expected return in India with a very stable currency like what we saw in the last 2 years, capital gains tax of 10% or even 12.5% didn't matter. But now when the return expectations have come down to perhaps just 10, 12, 15% in the current year, then the capital gains tax of, even for a long-term investor, about 14% including surcharge cess, that starts beginning to bite. So pretty subdued sentiment for the time being, but these are market cycles. We'll go through this period for a few months, and then hopefully we'll start seeing the government capex ramping up in the second half, and a lot of the Trump-related uncertainty will settle down. So that's why we're expecting a slightly better second half.
All right, so mood a little bit subdued, Pratik, but large caps could be coming to those levels that look pretty attractive, and a couple of sectors that you like and themes that you like: pharma, large private sector banks, insurance companies, and select NBFCs as well. So sometimes these timings of uncertainty, they provide some opportunities as well. Thanks a lot for joining in, Pratik. Hopefully the next time around when you join us, things will be a little better in terms of the mood for the markets.